the doves that have the argument with the data behind them. Slow growth, non-existent inflation, the consumer under pressure with declining income, negative business investment. There's really no incentive at this point looking at the data. So if the Fed is truly data dependent, there really is no sense of immediacy to raise rates right now. And certainly they may have to raise rates faster if we turn the corner into 2017 or beyond. But the risk of raising rates too fast more than offsets the risk of raising them too slow at this point. So I think the doves have it. I think, if anything, the minutes really reinforce the idea that there's no sense of urgency to raise rates at November or the December meeting.
Waiting too long risks the expansion, Paul. That was what I heard Hampton say. How?
Well, I just getting back to this. You know, if you look at the decision, if they don't go in December, where will the doves have any pressure? Because the three dissenters are all going to be non-voting members next year. So there's going to be little pressure to hike rates going forward if the three dissenters, the three people who want to hike rates the most, are no longer voting members. And the people replacing them are to the dovish of them. So, you know, if there's not a sense now, there's not a sense of urgency now, there will not be a sense of urgency.
But what's the risk to the expansion in waiting longer?
Well, in waiting longer, you're going to have an issue. If you wait longer, you have inflation issues. You know, will inflation pick up? But what we're, you know, and that's a doves argument, is that there's slack in the jobs market. The JOLTS gave them more ammo today. Although, I mean, there's seasonal adjustments to that, seasonal issues with that JOLTS data.
But, you know, it was really interesting, though, that they actually used the word credibility in the minutes. I mean, that was amazing. And I think that kind of speaks to Eric Rosengren and his stance that the cost of waiting too long is going to be another burst of financial instability. And that's where he's had his focus.
And you know, the flip side of this is that we're getting split messages now from the bond and stock markets. Yesterday, it looked like the stock market was starting to worry about a Democratic sweep. And what a Democratic sweep means in Washington is potentially higher taxes and even stiffer regulations that would slow the economy.
Yesterday's sell-off was because of politics?
I think part of it,
Imagine that.
Yeah.
And
it wasn't the rising dollar, it wasn't rising rates, it wasn't...
No. And I think that, and the part that's discordant from that is the fact that rates were going up for no apparent reason. There wasn't any piece of data.